Hello, good morning and welcome. You're watching The Mining Show, brought to you by Blythe Way. I'm Charlie Gibson and you're watching Core Finance. Now, as you know, consistent with our policy of trying to find companies that have the potential, certainly for their share price to go up, well, you know, 1, 2, 3, 4, as many times as you like, possibly, depending. We have got an opportunity here for you today, and some would say that its shares have soared, and certainly for a long time, if you measured it from March 2010, you would have found that it was the best performing gold share in the London market in US dollar terms. The shares have come off a bit, it would be true to say, in recent times, but in a way, that's all the more opportunity for investors. Now, I talked about those shares soaring on thermals in Central America, perhaps. And the reason for that is this particular company is called Condor Gold, and I'm joined by the Chief Executive, Mark Child. Mark, very good morning. Thank you very much indeed for joining us. Give us an idea of where you are with Condor Gold at the moment in terms of its development, where it's come from and where it's trying to get to.
Well, over the last sort of 8 years, I've taken it from £1 million company up to the market cap it is today. We have 2.3 million ounces of resource. We have a PFS included within that of 675,000 ounces within 3 grams open pittable. And we have half of that 2.3 million is indicated and half inferred. And the last 12 months or so, we've put in about 8,500 meters. So the project in total has close to 80,000 meters of drilling in it. So it's a very advanced stage project waiting for permits.
Okay, so and how long has that permitting process been going on now for you?
We we put in an EIA, an environmental impact assessment, applying for an environmental permit 2 years ago. And it's fair to say that's taking longer than we'd anticipated. So there's been if you like, a delay on permits, and that's hurt the share price.
And is there light at the end of that particular tunnel?
Yes, I mean the government continues to reassure me that it wants to see a mine. Mining's the 3rd biggest export there, and this will be the 4th big mine in the country. They're very behind it. I've just come back from 3.5 weeks in Nicaragua and had several key meetings. So I'm confident we'll get permits.
But can you put a timeline on that, or is that tempting fate?
If I was to issue the permits, they would have been issued 12 months ago, Charles. But Nicaragua works in its own way on timing. We did have presidential elections and mayor elections, and going into those, the government is preoccupied with
other
politics.
Things. Yeah.
But the last elections were in November this year, so just over a month ago, and they've made comments to the World Bank and the IFC, who are a 7% shareholder in the company, saying we'll get the permits after the election. So I've just had, in the last 2 weeks, I've had 3 sets of meeting with government ministers and technicians over the permits, and the feedback and the sounds that I'm getting from them are extremely positive.
Tell us a little bit, the project is in Nicaragua. That's probably less familiar to European investors than other parts of the world. How do you find doing business there?
It's a good place to do business from a mining perspective because there's a mining culture. They've been mining gold for hundreds of years, so that's an important point. They give you permits for 25 years, and they're exploration and exploitation, so there's a long levity of life over there. We have tax deductions on importing of vehicles and so on, and the upfront capital costs are fully tax deductible. So the mining regime is positive. They've had 2 mining conferences in the last 3 years. They have them biannually, and there's another one scheduled for this year. For next year, for August next year, and we sponsor those. That's the only place in Central America that actually has large mining conferences. A minister attended PDAC in March this year, and they're likely to attend it again next year in 2018. And they're sending the same message: we're open for business. It's the poorest country in South America, and they see mining as a key pillar of the economy to help it grow and alleviate that poverty with lots of jobs and foreign investment and so on. So it's the right thing. The frustrations come with some of the bureaucracy. For example, it can take me 10 months to get a concession. There's a lot of red tape. We never paid bribes. We haven't come across corruption, which surprises people. It just takes time. So there are frustrations that go with it. Security-wise, statistically, it's the safest place in Central America, which there's still an edge to a poor country, as you'll appreciate. But nothing like the troubles that you see in Honduras and Salvador and Mexico, for that matter.
Because if you're from a certain generation, you remember things like, I don't know, Ortega's and Iran-Contra and the US, and it was sort of there in almost the front line of the Cold War for some, and people think of Central America, they think of drugs, but that there's none of that you see in terms of the operating environment. That's all in the past now. It's a new country.
Therein, to your comment about in adversity lies an opportunity, or alluding to that, that's exactly why we're in there. The revolution was in '79. There were free and fair elections in 1990. So for 27 years, it's been a democracy. No civil war. 60,000 people died in the revolution and the civil war, against which the US backed the military junta out of Honduras. The Sandinistas are very much a party of the people and socialists, and you're correct, they were backed by the Soviet Union via Cuba. But the place for 27 years has been a democracy with sort of characteristics in it, but it's still been a democracy. And I think what you've now got is the similar people are in power, but you've got born-again capitalists. In other words, when I say that, it's a bit like the Chinese or the Russians. Power is key. So if you're a politician there and you're a Sandinista, you want to hold on to power. But actually you realise that what you did after the spoils of war 30 plus years ago, which was nationalise everything, doesn't work. So nationalising sugar mills, gold mines, land, all that, which they did, and the spoils of war 30, 35 years ago, sent the economy into a hiatus and nosedive and sanctions. But for 27 years, it's been coming out of that. They've had a healing at a national level. They've now opened up lots of trade zones. They have political stability, which is really important. I think the key thing in these is political stability. So they have that, and we can make business decisions around it. There's lots of free trade zones. The town's booming. I mean, the Managua's, I can't tell you the sort of traffic jams, the growth. It's playing sort of catch-up economics, if you like, because it was a pariah in a way, and it didn't get that foreign investment, but now it's rolling in.
Thanks. Tell us a little bit about the project. Where is it in Nicaragua, and what stage? You've done a pre-feasibility.
Yes.
You've optimized it using a Whittle optimization bit of computing, and so now you're waiting for these permits. And where next?
The optimization actually is a $200,000 study on. So it's a bit more than a bit of computing.
It's a lot. That's an understatement for a lot of computing. Yes.
It's a massive, very detailed mine optimization plan with cut-off grade optimization and stockpiling, and it costs more than the PFS did.
Right.
But it did take up the NPV 70%. So an IRR's at 31%. So it made the project with 3 gram gold. You've got the grade. It's one of the highest grade undeveloped gold deposits in the world, which gives us that $700 all-in sustaining cash costs under 3 separate scenarios. So we have a PFS case of about 80,000 ounces of gold a year. We have the Whittle optimization that takes us to 100,000 in the same pit. It pushes the pit a bit deeper. If we add in feeder pits, we get to 118,000 ounces per annum. And if we add in underground, it gets to 165,000 ounces around. So we've shown 3 different production scenarios. But even that it excludes the Mestiza vein set. So what we've been drilling in the last 12 months has been Mestiza. That had a Soviet resource of 780,000 ounces at 10 grams, unmined by Naranda, because it's an old mining district, this. We have 330,000 ounces. Now, we drilled the top of that Soviet resource, and we've had some great drill results that have come through. 3.5 meters at 28 grams, and beneath it, another 3.5 at 24 grams. It's a high-grade ore shoot.
These are bonanza grades.
These are super bonanza grades, and they can change a project. And the London market doesn't get it because it's just focused on permits. So we put the drilling in, and I think one of my great frustrations about AIM is that we're super confident we're going to get the permits. There's no doubt we'll get permits for a mine there. While we've been waiting for permits, we've gone on and drilled out the deposit, adding more ounces. And these aren't just ounces on 10 kilometres away from the deposit. This is expanding existing resources with a view of getting them into a mine plan, really close to where the PFS, the mill, is going to be. So I've given you those three production scenarios up to 165, and they exclude 700,000 ounces of high-grade Soviet resource, which is 1.5 kilometres away. The recent drilling shows that a big chunk of that's going to come into a mine plan. So this high-grade ore shoot could easily be 150,000 ounces at bonanza grades at 10 grams, say. That changes your project's economics enormously. There could be $100 million free cash flow just coming out of that high-grade ore shoot. So that we've announced this year with a number of drill results in June and August.
So permits come through sometime in the foreseeable future,
yes.
And then is the next stage to do a bankable study, effectively building upon the pre-feasibility that you've done and the Whittle optimization that you've done,
yes. Or
or is it to reimagine the mine because of the results of the recent drilling?
That's a good question. We've said to the government, we're not going to do a bankable feasibility study until you give us a green light. Mm-hmm. Why? Well, that involves 10,000 metres of infill drilling to have tighter drill spacing on the main PFS resource to take it to bankable feasibility. And it's engineering, and it's a $5 million study, including the FS level engineering, which will cost $1 million and so forth. So there's no point us spending $5 million on a bankable fees until we got permits, and we've got to buy land and so forth. So we've been getting on with the project. So I think that's. I think when we get permits, we will go down that base case. But just bear in mind, Charles, we've got 900,000 ounce open pit resource, and we got a 1.4 million ounces outside of that. And of that 1.4 million, I think it's quite easy for us to add another million ounces to it, to existing resource. Why, going along strike and down dip. I'm not talking about a resource 10 kilometres away. I'm talking about going down on extending what we have, which can be added into a mine plan. So money providing, and of course, we are an explorer. We do not have cash flow. We have a bank balance that goes down every month, and that's something I have to manage as CEO. But if we get the permits, we'll progress the base case, let me call it. I'll start a pit. It'll be a nice starter pit. 80 to 100,000 ounces. We'll advance that to production, for sure. We'll do those bankable studies. But we have another 1.5 to 2.5 million ounces if we find the extra million, and we will, which we can add into a mine plan. But I want to get the base case started. So what I'm not going to do, I'm not going to, answering your question again, I'm not going to hold everything, drill out additional ounces, wait, redo a PFS, let's say we double the size, or treble the size, which maybe some people would like to see. I think it's important now for us to have a clear route to free cash flow, even if that's, say, only 80,000 ounces to 100,000 ounces of gold a year. And so we need to keep along that free cash flow strategy and have a path to that while showing we can add a lot more into the project. All of that is funding dependent.
Of course. We're short of time, so just remind me, what is post-Whittle, the Whittle optimization, what is the NPV of the project as it stands?
$195 million on average across those three scenarios.
So 195 million, and your market capitalization at the moment?
Dollar turns about $35 million. So our price to book ratio is under 0.2.
Excellent.
And our ounces in the ground is about $15 a resource ounce in the ground. So we're cheap as chips.
Lots of opportunity. Excellent. All right, Mark, thank you very much indeed. Ladies and gentlemen, that was Mark Child, the Chief Executive of Condor Gold, soaring perhaps on wings of gold over Nicaragua, over Central America in this particular instance. As I say, for many years, the best performing gold counter in London, with one of the rare accolade of actually outperforming the gold price. So definitely one to have a look at. I'm afraid that's all we got time for today. But this is me, Charlie Gibson, signing off for the Mining Show, brought to you by Blytheway on Core Finance. And until next week, you have a very capital day.